But this is also something that people take for granted because it's so simple and it's so basic. Intentional diversification. Not all markets will be down forever. And you also have to realize that while some markets are down, there will be other markets that will be performing better. There will be other markets that will be doing well. Hey guys, so in this video, I want to share what's going on in the markets. As of this recording, we're seeing the US stock market, particularly tech stocks, do so well in a time also when we're seeing Philippine stocks being laggards, not really going anywhere also for quite some time already. We're seeing also Bitcoin still far from its all-time high, but has rebounded massively from the lows of 2022 from 16,000 to where it is right now, hitting past 30,000, and with a lot of good news coming in for ETFs or Bitcoin ETFs coming in, and also XRP not being a security, we're seeing it in a better standing as compared to where it was in 2022 when it had a lot of issues. Now that being said, if I was gonna create a hierarchy in all of this, we're seeing US stocks do better. Right in the middle, we're seeing Bitcoin and crypto, and then we're seeing Philippine stocks as a laggard. Now that being said also, I'm not the type of investor who into options or who's really a forex trader, and that's why I'm classifying these assets based on what I know and what I use most of the time. For me, it's the Philippine, US, and crypto markets as a whole. And if there's one strategy that I want to share to all of you, but this is also something that people take for granted because it's so simple and it's so basic. Intentional diversification. Not all markets will be down forever. And you also have to realize that while some markets are down, there will be other markets that will be performing better. There will be other markets that will be doing well. And your goal as an investor is to position on the ones that are down, because similar to cycles, whole goal and the whole narrative of it is it's gonna tip back up again, and you will reap the benefits of entering low. While that's being a laggard and you're stacking it low and you're stacking it very, very cheap, the ones that are performing better, aka July 2023, you have Bitcoin and cryptocurrency tech stocks that are highly connected to AI, then you are riding that. The narrative is it's not just diversification, but it's the strategy of adding towards the ones that are down, riding the ones that are up, with the goal of taking profits also for the ones that are up as well. And you have to remember that it's all cyclical. The US market won't stay up forever. It won't be up forever. The same with Bitcoin. It is up right now, but it still has a lot of room to grow. And halving is coming in the next few months. And I do believe that we're gonna see better strides also in the crypto market industry by that time also. That's why you have to be strategic on how you go about your investment. So for the ones that are up right now, ride it, but also be strategic on when to take profits. For the ones that are down, stack onto it, add to your positions in it, and build the base off of it. I guess one of the things confuse people is that, what if it's not going up? What if it's lagging? What if it's not doing so well? That should be okay. That's why you're diversified, because there will be positions and there will be assets that will be okay, but there will be positions and there will be assets that are not doing okay, that are laggards, and that you are stacking them. It's okay to stack. It's okay to add into positions, into assets that are low, that are down, that are laggard, that people don't want to get into it. When the market is bullish, always remember that it's nice to talk about it when it's bullish, when everything's going up, when everything's good, when everyone's optimistic, when everyone's so excited. However, you have to be already positioned at that time. It's not the time to add a larger base when the market is bullish, because you're buying higher. You'll probably also be the exit liquidity of those who entered lower. Diversify, but be strategic. The whole context of buy low, sell high, that hasn't changed. I'm nearing more than 15, 16 years as an investor, and it really hasn't changed. It's still buy low, sell high, and people want to buy high because that's when the market's optimistic. That's when all of the good news are factored in. All you need to realize is you have to be patient. That as you diversify to the ones that are low, that are laggard, knowing fully that it's a cycle, that they shall be up after a cycle completes. We don't know when will it go up, but we do know that it will go up. Once the market turns bullish, the good ones will not just go up, but most likely they'll test high, or they'll probably go higher than where they were before. I've seen it happen in 08, I've seen it happen when the markets crashed after 2003. ESE hit an all-time high at 7,400. Then it retraced after that. It crashed. A few years later, hit an all-time high of 9,000 in 2018, which was like a 5-year period from that. We're nowhere near that all-time high right now. We're very, very far. That's one of the best times to stock. That's one of the best times to add. Always remember that the best time to be able to add, the best time to be able to invest is when no one wants to invest, when it's fearful, when it's scary, when people are telling you not to get in, when people are laughing at you. By the time the market is bullish, they're gonna buy higher. And of course, even when you look at it from the Philippine context, we lack foreign institutions coming in, which over the past few days, by the time I'm recording this, there's already more now than the past few weeks. However, we still need more. Those foreign institutions, it's okay for them to buy higher because they have billions of dollars that they can actually deploy. And they're just shifting from one market, from one country to another, from one asset class to another. So we're just also a diversification play for them. And that's why you have to be smarter, especially if you're just positioned primarily in the Philippines. Your only option is to stack and then wait for the foreigners to come in. But if you're positioned in other markets, then that also protects you. That gives you the ability to also ride certain assets that are going up while they are headed up, while the ones that you are looking at are also laggards. I think it's a way for retailers, for all of us, to be able to be part of it. And if you notice it, I'm just talking about Philippine stocks, US stocks, and crypto here, but you could also somehow diversify into fixed income assets, because right now, by the time we're doing this video, fixed income assets from even savings accounts or even time deposits or even digital banks are giving you a higher rate of return with minimal risk involved. And I do think that matters, especially if you're older. Getting cash flow from your investments, cash flow that you can use to reinvest, or cash flow that you can use to buy other stuff, it matters. I do believe it's what's going to help you also over the long term. Since not a lot of people can take the volatility, it's something that you can use to help you grow a portfolio while you're not being scared of the volatility. People would always say that if you go to fixed income assets, you don't have any capital appreciation if you hold it till maturity, which is correct. However, your capital appreciation will arrive when you get those dividends or you get those interest payouts, and then you start stockpiling them and you start reinvesting them. And that's when you start earning more money, and that's when it becomes more exciting also. You're reinvesting, and as you're reinvesting, you get to actually earn more as well. Just to summarize everything that I said, number one, age-old strategy that works, diversification. Number two, as you diversify, look for the ones that are laggards, build a position on it. The ones that are bullish, ride it with the intention of also taking profits and selling off of it. And number three is it's okay to have fixed income assets. And to wrap up all of this, number four, you have to be disciplined and patient, that when the laggard ones are not doing anything, you're supposed to stick to your plan, stack, build a base. And also be disciplined and patient also, that when you have assets that are going up, not to sell too quickly, but to ride it and maximize it, but also to think that you need to take profits and take money off the table as well. If you want to know more about stocks, check out the links that I have below. I have seminars, webinars that are on demand, where you could learn technical analysis, where you could learn fundamental analysis. I also have a investment course 101, which will talk about stocks, bonds, Bitcoin, NFTs, altcoins, and so much more. I've written 5 books about it, and if you stayed up until the end, like, share, subscribe, and smash the bell so you get updated every time I come up with new content about investing. By the way, guys, I haven't had a lot of videos with little Satoshi, but this is her now. Look at her, she's so big already. Look at little Satoshi. She's turning to be a big girl. She can do anything she wants to do except Jowa. But I guess that's it for now from me and little Satoshi. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.